this has fallen, the Sensex has actually fallen dramatically. And when it has risen, that Sensex has outperformed gold. It means I should be putting money into the stock market rather than keeping money in gold. So basically gold becomes a risk, a fear asset. When I'm fearful, I put money into gold. When I'm bullish, when I'm confident, then I put money into business. So when this has risen, the Sensex has done well. The Sensex is the blue line. Here we find that the Sensex gold ratio has fallen dramatically. This is one ratio which is making me worried. If it had not been for this, I would be very bullish on the Sensex. And concomitant to that, I would have been very bullish on the rupee. This same picture of a fall in the Dow Jones is, the same picture you can see in the Dow Jones falling against gold. This is one worry. But if I look at the gold chart by itself, okay, these are monthly, this is a monthly chart. We find that the recent rise to 1260 gives us a resistance at around 1260. If we continue to remain below 1260 through February we close to an end, through March and April, then maybe we come down towards 1150. If that be so, then a lot of the fear which is currently in the market would stabilize, would subside. So basically the market is very fearful at the moment. That's why the gold is up and the Sensex or the Dow are down. Another factor which works against the rupee is the fact that undeniably the rupee has been overvalued. After September 2013, this low, the rupee has appreciated relative to other currencies. We've seen the euro depreciate, we've seen currencies like the Brazilian real or the Russian ruble or the yen or the South African rand. Most currencies depreciated through 2013, 2015, and they depreciated much more than the rupee, leading to relative overvaluation for the rupee, which is around 11-12%. Now, you would have also seen headlines recently that the rupee has been the worst performer amongst most emerging market currencies in January and February. That is correct, and that would have brought down the overvaluation a little bit, as you can see in that red circle. But for that overvaluation to correct further, for the overvaluation to come down to levels of more manageable levels of about, say, 105, we could see some more rupee depreciation. So this is the two factors which I have talked about, which work against the rupee, are the fear factor in the market, which is leading to gold being favored against the stock market, and the rupee overvaluation. One thing that many a times when talking to clients tell me that, okay, we know that the rupee is going to depreciate, but we find it very difficult to hedge because the hedging premium is so high. Is it really worthwhile to hedge? I'll show you a small chart, which I think is not generally known. This is the annual high-low range of the rupee, of dollar rupee. As you can see that sometimes here in 2008-9, the rupee had depreciated by about 30%. The high-low range over a year. On average, I think it would be good to look at an average of about 10%. So contrary to what generally people might feel that the rupee depreciates but not really so much, the fact is that on average it does depreciate about 10%. And going into 2016-17, it would be good to be prepared for about a 12% movement. Now, this 12% high-low range, the big question remains, which direction does dollar rupee go 12% higher from here, or does dollar rupee come down 12% from here? Okay, that of course is the most difficult question to answer. Coming to dollar rupee charts by themselves, we think that there could be some chance of a resistance at 69, close to the high that we had seen in September 2013. If this resistance holds, then maybe the market trades between 69 and 66 for the next few months. These are quarterly candles, so for the next 3 months or 6 months, we could see the market range between 69 and 66. That's a possibility. But in case the market breaks above 69, then maybe 70 plus is possible. So, what is the path that we see for dollar rupee? I'd say that there are two possible paths. The current spot being somewhere around 68.40. Maybe the first movement that we'll see would be a rise towards 69.5, 70.5, taking into consideration the fact that the yuan fear is still there, that the gold fear is still there. Those could maybe drive dollar rupee to 69.5. But from there, maybe we get a 12% fall from levels of, say, 70. And maybe March 2017, we might be as low as 61.60. This might sound outlandish at the moment in today's market, the sentiment being what it is. The second possible path could be that maybe we fall down first. The market doesn't go above 69 for the moment, falls to about 67, 65. And then we see a 12% rise from 66, giving us a March 17 target of 73.92. We would prefer the first path. Okay. Even if we see the second path, one thing is clear. Whether we go to 70.5 and fall to 61.60, or whether we fall first to 67.65 and then rise towards 73.92. When you see headlines like the rupee can become an old man of 72, I would not want to panic, because as I showed you here, 15-16 has already seen an 11% movement. So if I were to panic and buy dollar rupee at this point of time, it might not be the best thing that I could do. Having said that, the markets are uncertain. The variables to keep track of would be to see if the dollar yuan rises above 6.55 or falls from here, and to keep an eye on the Dow and Sensex whether they are rising, and to keep an eye on gold whether that is falling. If the Dow and Sensex were to rise, if gold were to fall, then it would increase the chances of dollar rupee not rising beyond 69. This was my take on the rupee. Why should you have been listening to me? We think that we have a reliability of 72%. We've been tracking our performance since 2006 for the last 10 years. We're the only people who publish a track record, and statistically, from reliability levels of around 40% earlier, we are now at a much better 76% reliability, which has resulted in Bloomberg giving us a rank of #1 worldwide for our December 2015 forecast, ahead of names like ABN AMRO, JP Morgan, several other names, and Citibank. We're very, very glad, not for the #1 position, but for the fact that we're the only Indian name in the world for dollar rupee. You have with you our brochures. If you would need help on rupee at any time, we would be very, very happy to be of service. The couple of things that you could possibly look forward to, in the words of our clients. This is Mr. Vijay Shimal of KN Group Raipur, who has said that Kshitij has the guts to put their views very clearly, unlike others who add ifs and buts everywhere and confuse the client instead of providing a direction. And Shri Murli Saraf, he is a very large importer of polymers. Kshitij is the only advisor that has taken a firm stand on the market at various times And at times they have, and at the same time they have always been willing to accept their mistakes gracefully. Thank you. And if we have time, I would be very happy to take questions.
We have time for one question. Your mic's coming around, sir. I'd like you to please stand and identify yourself and ask the question. Would there be a second question? So that's two questions that...
Good morning. My name is Puneet Walia.
Yes, Puneet, good morning.
I'm going to corner you here. I want you to put a finger on the USD rupee rate for 2 months, 15 September 2016 and 31st March 2017. What would that be? Your numbers.
You're asking me for euro dollar and dollar rupee?
USD Indian rupee.
USD rupee for September 16?
And March 17.
See, September 16, I would say it ought to be below 70, in the region of, say, my best number would be something like around 67 for September. And if things go right, then March could be as low as maybe 64.
Are you ready to take bets on this?
Sorry?
Are you ready to take bets?
We are already taking bets with our clients.
Thank you.
And you asked about euro also, I think?
Only rupee,
Only
dollar
rupee.
rupee.
Okay,
Thank you.
right.
Sir, please. The mic is on, sir. The mic is on.
Sir, my name is Krishnamurthy. I am from Chennai. I am representing a company called 4P International Private Limited. I am the promoter.
Good morning, Mr. Krishnamurthy.
See, in the year 2000, I have been in this trade for the last 20 years. I am an importer.
Right.
So I am always interested to know or try to understand the movements of dollar versus rupee.
Right.
See, in the year 2013, the rupee, fell like 9 pins.
Right.
Between May 2013 to September 2013.
Absolutely. Yes.
From 52 rupees to 68 rupees.
Right.
I have been a subscriber to a leading forex expert.
Right.
And I'm very sorry to say this, no expert has cautioned us that the rupee would slide like this, number one.
Okay.
Number two, at that time, what we were told was, India is the biggest importer of crude, and crude was quoting more than $100,
right.
and it is a USD guzzler. Number two, we are the biggest importers of gold, and gold at that time was quoting somewhere about $1,500, and gold is a dollar guzzler.
Right.
And unfortunately today, crude has fallen from $114 to $30.
Right.
And gold has fallen from $1,500 to $1,100.
Right.
And still rupee falls.
Right.
Okay, there may be so many parameters. I'm not going into all that. What I'm trying to find out is, what is your immediate call for the next 3 months? Dollar versus rupee. Thank you.
Right. This is a fantastic analysis, and you're absolutely right. With gold having fallen so much, with crude having fallen so much, why is dollar rupee back to levels close to what we saw in September 13? But just before that, we also had got it wrong in September 13, but we had warned our clients that there could be chances of us going wrong and of the rupee depreciating sharply back in 13. Okay. For the next 3 months, as I told you out here, my best bet would be that we remain below 69.5 or 70.5. We can possibly go up to about 70. While the market remains fearful for the moment, the market is definitely fearful. This fear can remain for the next couple of months, but over time I would think that possibly the fear will subside. And if that happens, then maybe we go up to about 69.5, 70.5, but then start coming down from there. That is my best call.
Thank you.
Thank you, sir.
Thank you, Mr. Murarka.
There's one more.
We'll take that if it's a question that's brief and pointed. Please pass the mic on. So behind you.
Out there.
From the technical point of view that we are going to see an uptrend in that.
Yeah.
So my question is, how do you think the fundamentals are supporting in that? I mean, see, we are yet to see any good numbers on the earning part. The euphoria for reforms is long gone. So how that part is supported by the fundamentals? Do you see some change, or there will be a collision between the fundamentals as well as the technicals?
No. Actually, last week with the marketing manager of Ashok Leyland in Chennai, and he said that they are seeing very good demand for their HCVs and MCVs, which is traditionally a very good indicator of a turnaround in growth. That's one. Secondly, we saw last month or a month before a rise in the imports of